Welcome to today's market report. European stock markets edged mostly higher on Wednesday, helped by strong results from Zara owner Inditex, with investors cautiously awaiting the Fed for guidance on the economy. DAX traded 0.1% higher, CAC 40 rose 0.1%, FTSE index was down 0.3%. Equity markets have mostly regained their pose after last week's turmoil, mainly surrounding the tech sector, helped by upbeat economic data from China and the US, the two largest economies in the world. Recent news out of Europe has also been encouraging, with German ZU index, the first of the big gauge of sentiment, to be released this month, defying expectations for a fall. Staying on theme, consumer prices in the UK rose by 0.2% in annual terms in August, the smallest increase since December 2015, data showed on Wednesday. However, this was still a touch better than expected, as a subsidy scheme to support the hospitality sector helped to push the inflation rate down. Investors are locked to central banks for direction, and in particular the US Fed, which concludes a two-day policy meeting later today, the first since adopting a more tolerant stance on inflation in August. The Fed is due to announce its decision at 7 o'clock London time, followed by a news conference from Chairman Jerome Powell. The Bank of Japan and the Bank of England also announced their respective policy decision tomorrow. In corporate news, Inditex stock climbed 5.6% after the fashion retailer returned to quarterly profit in the 3 months from May to July, despite sales slumping as consumers stayed away from city centre shopping districts. This follows Swedish rival H&M beating quarterly profit forecasts on Tuesday and could represent a rebound for the battered retail sector. H&M stock rose another 4.4% today. Oil prices rose after the American Petroleum Institute detailed a big drop in US stockpiles, and Hurricane Sally continued to disrupt offshore production in the Gulf of Mexico. Crude future traded 2% higher at $39.04 a barrel. Brent rose 1.7% to $41.22 a barrel. Gold futures rose 0.4% to $1,973.75 per ounce. On the FX front, the GBP-USD pair extended its sideways consolidated price action and had a rather muted reaction to the UK consumer inflation figures this morning. The pair continued with its struggle to find acceptance above the 129 mark and witnessed a modest intraday pullback today, albeit lacked any follow-through and remained well within the previous day's trading range. Growing market fears of a no-deal Brexit held the GBP bulls on the defensive and capped the GBP-USD pair's recent recovery move from 7-week lows. Investors are expecting another £40 billion to be added to the £745 billion bond buying programme in November by the Bank of England tomorrow. That's when updated economic projections will be published, and just weeks before the end of the UK's transition period for leaving the EU. While a rate cut probably won't be the BOE's first choice, money markets are pricing in a reduction as early as February. Economists say the main rate could fall to minus 0.5% if Britain fails to strike a deal with the EU. The cliff is the end of the government's furlough scheme on 31st of October. Many governments in the rest of the Europe have extended their own programs, but the UK insists that businesses must adjust to the post-COVID economy. Euro-dollar is still seen between 117.50 and 119.20 in the near term, possibly tracking a continued rally in China's yuan. Big gains may remain elusive in Europe on caution ahead of Fed's rate decision. The pair is currently trading mostly unchanged on the day at 118.48, having hit a low of 118.29 early today. Nonetheless, the selling pressure of the euro weakened, allowing recovery after the People's Bank of China's decision to raise the daily yuan fix by most in 5 months triggered broad-based US dollar selling. The dollar index was down 0.03% to 93.085. This is today's market news. Thanks for listening. We'll see you next time.